Welcome to Pressure Points. I'm Gene Munster. Our topic today is Tesla's September quarter preview. They're going to be reporting on October 18th. That's a Wednesday. And the pressure point is automotive gross margins excluding credits. And so we're going to first talk about why margins are so important for Tesla investors, and then talk about the September quarter outlook on the topic, December outlook, and then I'll grab all other things to be thinking about. So going back to why are margins so important for Tesla investors? And the reason is that they are the battleground between, is Tesla a high margin tech company or a low margin traditional car maker? And over the last 6 months, Tesla's operating margin, one way to measure that, is 14%. And that compares to traditional car makers at 8%. And so it's higher, but it still lags what is the gold standard of operating margin when it comes to hardware, software, and services. And that, of course, is Apple. And they're at 38% more recently. So there is a lot of room for Tesla needs to close the gap to be considered an Apple-like operating margin story. But there's definitely room where they can expand their current margins. I think ultimately they get to 25% plus over the next 3 to 5 years. And I think traditional car makers, they're, as I mentioned, at 8% more recently. I think over the next decade, their margins are actually going to decline because I think the transition to electric is going to be more costly. And so that's the setup. And of course, when we talk about 3, 5, 10 years, each of those is built by quarterly expectations, which gets us to the September quarter. The analysts are expecting for automotive gross margins ex credits of 18.2%. That's up from 18.1% in the June quarter. My expectation is that they're going to miss that number. I think it comes in more like 17.5 to 17.8%. And the reason is there are two headwinds that I think analysts weren't anticipating when they did their models 3 months ago. The first was the retooling that happened at Giga Shanghai related to the new version of Model 3 Highland. That cut production, efficiencies declined when you stop production, and that causes the cost per other vehicle to increase. Separately is that there was, we'll call it a below the fold price reduction in the US. Tesla was giving discounts. I estimate it was about 4% on average for cars in inventory. I think it probably impacted less than 10,000 vehicles, but it is something that was a headwind in the September quarter. So when you put it together, expect a slight miss there. And I'm just playing this through as the numbers come out. That's probably stock reacts negative to that. And then as we shift gears and get to the earnings call, I'm hoping they give some commentary about what the outlook is for December. I think it's going to show improvement from over September. And specifically is that the biggest tailwind, or I think that it improves from September and ends at probably something like 18.4%. That's where analysts are currently at for the December quarter. So I think that December number is a good number. I think they'll be able to, analysts will stick with that number post earnings. And the reason is they have a tailwind. The biggest tailwind in the quarter is related to volume improvement. Production volumes are going to improve, and that's going to lift efficiencies. It's basically the opposite of what happened in September. In this case, it's because Shanghai is up and running again, and overall, we should see about a 10% increase sequentially in the production numbers. That gets them to that 1.8 million number for the full year. So a 10% step up should improve margins quarter on quarter. There is a neutral factor in. On October 3rd or October 5th, Tesla lowered their pricing of some vehicles in the U.S. When you factor in the mix on those price reductions and the fact that it was U.S. only, it probably is a 1% kind of headwind to pricing for the quarter. But they've also eliminated that inventory discount that they gave, so there's a little bit of a tailwind when you put that together. So the net of all of this is I think the December street expectations of 18.4% are going to be good, and analysts will say that margins are expanding from September to December. So that's the pressure point. I do just want to talk about the other category. Couple topics. One other thing I'm listening closely for is just, of course, what's happening with Cybertruck and how that's ramping. I think they're going to do less than 5,000 Cybertrucks this year. It's going to take longer than we think to get there. Eventually, I think Cybertruck could be 20 to 25% of total Tesla vehicles, be 350,000 plus per year in the next few years. That is still below what the F-150 sells in the U.S. They sold in 2022 over 600,000 F-150s globally. Most of those were in the U.S., but there is a case that there's a big market for light trucks, and Cybertruck is going to be playing into that. The rumored wait list for this is around 2 million. I think the real wait list is probably 1 million, and spread that over a few years, and you get to call it 300,000 plus vehicles per year. So Cybertruck's one thing to be keeping a close eye on. And another is related to changes in tax credit. I want to give credit here to Rob Maurer from Tesla Daily Podcast. He does such good work on Tesla. And Rob talked about the impact of, at the end of the year, we're likely going to see a reduction. And the $7,500 price cut likely goes to $3,750. That would increase the average cost of Tesla by about 6% in the U.S. But there could be some changes on the positive side related to the tax credit, some changes where consumers can recognize the tax credit at the time of purchase. Today, when you use the tax credit, first you have to have a tax liability to offset that. Not everybody has that. And separately, you got to wait like 12 plus months to get the money back. So there may be some changes where they allow you to do that instant gratification and recognize that tax credit right away. So thank you, Rob, for that, and something else to think about as we navigate estimates for the first part of 2024. We're going to have more to come in about a week, and on behalf of Pressure Points Deepwater, I'm Gene Munster. Bye for now.